thou shalt accept that thou shalt be wrong at least 1/3 of the time. And some of these commandments leaked out from God over the years, and uh, this comes from John Templeton, and basically the investment process is one where we are extrapolating, or we are trying to extrapolate the future of a business, or the future of many businesses. And by definition, that is a very inexact science. There are a multitude of factors that are going to affect every business into the future, and especially when we're trying to forecast or figure out what happens to a business 5 years from now or 10 years from now. It is an exercise fraught with difficulties, and definitely fraught with a high error rate. And so basically, if I were to pick, or in my, let's say, my current portfolio, if 10 stocks made up most of the portfolio, there are probably at least 4 of them that will not behave in the future in the way I expected them to behave when I made the investment. So it doesn't mean that 40% of the time I will lose money. What will happen is that at least 40% of the time I will either not make as much money as I thought, or I might lose money on some investments, or they might flatline, or they might even do better, far better than I thought, all of the above. And so this is an exercise in humility in terms of managing investments, and one has to always accept the fact that the future trajectory of businesses is, and predicting that trajectory is at best an inexact science. And so we have to be kind of humble enough to accept the fact that even our highest conviction ideas may or may not get to where we expect to get them to. Then we get to commandment number 4.